looking at rehoning our portfolio to really focus on that plant-based foods displacing animal protein space. As we look forward, we think there's a huge tsunami of consumer demand, quite frankly, about to come on that front that we're looking to capture and help our entrepreneurs and portfolio companies capture that value as well.
Michael Aucoin joins me now. He's the CEO of Eat Beyond Global Investment Corp, trades on the CSE under the symbol EATS, and in the United States under the symbol EATBF. Michael, welcome.
Thank you. My pleasure to be here.
I was going to say welcome back, but the last time I spoke to your company, Patrick Morris was the CEO, so you're the incoming CEO. Tell us, what was the compelling logic behind that change?
A bit of an evolution, quite frankly. I think, Patrick did a great job in terms of setting the company up, a guy with a capital markets background. I think as we're evolving the model, the idea is that we become much more active with our portfolio companies. So my background, I've grown up in CPG, consumer packaged goods. So really a commercial and operations guy in that space of sales and marketing and manufacturing. And as we're partnering, particularly in the plant-based food space and evolving on that front, can really help our portfolio companies accelerate in terms of what they're doing in terms of getting the monetization. So our investment profile is we're very much looking at companies that, startup phase that have developed a product, maybe have a smattering of distribution. We come in with our team, which includes some substantial advisors, and really help them drive more distribution, tighten up their branding, develop a solid plan for manufacturing, and then build them out to a monetization event, whether that's going public or sale to a strategic. So it's really along that side. And, I've got the in-depth experience on CPG to really help them accelerate that way.
I see. So now then Eat Beyond becomes more of a strategic investor who participates or advisory role. And okay, I can see where that makes great sense. All right, so then since you've taken over, the last time we had the company as a guest was back in March of this year. What has happened since then?
Well, some reasonably strong development within the portfolio. I think the biggest news, which is just a few weeks old right now, is we've taken Nabati Foods public. Working with the innovator there, with the entrepreneur there, and that's a really exciting one because that was the first one testing this model of that really aggressive advisory role that we play. So we worked with them in terms of, when I talk about speed and acceleration being the key to what we do. Our initial conversations with them were September last year. We were the lead investor in November, then syndicated a substantial investment with some friendly investors that we know behind that to rework their strategic plan in terms of product offering, set up a manufacturing strategy with them, increase their manufacturing capacity, and took them public a couple of weeks ago now, and it's hit the ground running. So a lot of value creation in the run-up to the IPO, and then post-IPO, it's been performing very well. So that's a great example of what we're doing as a model. And again, we're looking at rehoning our portfolio to really focus on that plant-based foods displacing animal protein space. As we look forward, we think there's a huge tsunami of consumer demand, quite frankly, about to come on that front that we're looking to capture and help our entrepreneurs and portfolio companies capture that value as well.
Mm-hmm. So that's the interesting thing about your company that really intrigues me, is this idea that we're moving into an era where meat-based protein consumption is quickly being replaced by plant-based protein consumption. And that's all part and parcel of this idea that, well, we've got to take some serious steps to get this climate change under control. And it intrigues me because I've looked at over some of your press releases, and my studio is out here in Dunnville, Ontario, which is a bit of a backwater. It's only an hour and a half from Toronto, but still, it's a very quiet little community. And so Sobeys is my go-to grocery store here. And so it was heartwarming for me to see that some of your portfolio company's products are in my local store. So I'm actually going to be able to go and try those. So now at this point, your participation in these companies financially is as a minority investor?
Yes. Yeah. And One of the changes, even with Nabati, quite frankly, our investment was modest. I'll put it that way. The initial capitalization of Eat Beyond was reasonably modest. So we've taken small pieces of participation in most of the companies. That's something that we will be changing. We currently have a prospectus filed for another round of financing, which will give us the ability to participate to a greater degree. Again, using the Nabati example, we only hold about 2.5% of the company. And we syndicated the rest of the investment because we weren't capitalized to the point of being able to do that. As we move forward, we will want to take more material positions. In some cases, we may take majority shares. That's not necessarily the rigorously what we're going to do as a model, but we will take material shares. So you'll see us taking 25, 30, 40% of companies as we invest all the time to help them accelerate with our advisory roles.
Right. So then it strikes me that, as an outside observer of the company, I haven't been a shareholder, but it looks to me like you've kind of raised a little bit of money to prove the concept. Now you've proven the concept with these early acquisitions to the point where you've got institutional interest for, beefing up the war chest, so to speak. So then is there an intent to increase your positions in the companies that are succeeding, that are already in your portfolio, or would you be more inclined to diversify the portfolio across additional companies, or is it sort of a combination of both, very circumstance specific?
Yeah, absolutely a combination of both circumstance specific. So in terms of some of the companies where they need additional fundraising and they're on the right trajectory, we would certainly entertain putting more money into them. But as we look at it right now, there's a tremendous amount of opportunity broadly in the marketplace. I think I've been here for just over 12 weeks now, and the one thing that I'm pleasantly surprised by is, one, certainly the amount of opportunities to invest that are being brought to us. So I think we're building a good name in the industry. And then equally, the amount of investors that are willing to figure out how they can participate with us. So very positive on that front. So I think we definitely want to broaden our portfolio. We'll be broadening our advisory group as well to be able to handle that workload as we're building it out. But I think there's a lot of value in that. And it quite frankly gives our investors the ability to just have a broader portfolio they're investing in. Again, for us, what's relatively unique about Eat Beyond as an investment issuer is we're investing in pre-IPO companies typically. That the average retail investor simply doesn't have the ability to invest in. So for people who are really passionate about plant-based and kind of the evolution of food, we're giving that retail investor an opportunity to participate in that and get in at the early stages and reap some of those benefits. Quite frankly, where we see our biggest gains are during that acceleration phase, bringing them to monetization. So we'll focus most of our investments pre-IPO as opposed to post-IPO. But
I'm wondering, is it your expectation or your observation or experience that this evolution of new consumers towards plant-based proteins, are they coming from previously being meat-based protein people, or are they basically, is it a new generation of people arriving into the consumer world who have never been meat-based protein fans, have always been plant-based protein consumers, and that is the growing population?
There's a few things that motivate this. Certainly, there's the environmental story in terms of the world, and feeding the world at scale as the demand for proteins going up is simply unsustainable with animal protein. So that's number one. Number two, there's individual health as people are trying to figure out how to consume healthier for themselves. And third, there's animal welfare. That plays a role. So all three of those motivations filter into to the different generations differently, quite frankly. But we're seeing this tremendous growth in demand. And I think so for plant-based, and what you likely see at your grocery stores, you're seeing the initial stages of this conversion. I think for us in this space, it's incumbent to ensure that as people try for the first time, so a lot of people are in trial mode, that they're having a great experience. Early stages of plant-based protein maybe weren't quite so good in terms of replicating what people's expectations were of the experience of animal protein. And they're getting better. They're not always there yet, but they're getting better. And they would astound you in some cases how good they are. But we need to make sure that we're there. So as people are trying, we're attracting them into the category and getting them to repeat. So that's a lot of what we do with our portfolio companies as well. And how we filter them is, how good is the quality of the product? How good is that consumer experience as they're engaging with the product?
All right, Michael, that's a great update on the company we're going to continue to follow. Thank you for your time today.
My pleasure.
We'll talk to you soon. Bye for now. Okay, let's quickly talk on the back end of that about capital structure. So 15.7 million shares outstanding, total of 19 million issued and outstanding here. Fully diluted 33 million. That's a great structure. All right, so whoa, I stand corrected. 5 million shares were issued at half a penny. 5 million shares at half a penny. 7.3 million shares were issued at 2 cents. 2.6 million shares issued at 50 cents. So of the outstanding shares, there are 12 million, or just under 50%, were issued below 7 cents. So I expect this stock to go much lower. So let's take a look at this chart here quickly. So having reported 3 cents a share in losses, it's understandable that the company would be selling off a little bit. And obviously it has sold off since its debut way back here. So that's why I tend to think that the early stage investors who wanted to exit in this strength have done so. And so I think they're getting ready to do a prospectus offering. As he said, I would wait to see what that offering price is. If you can't get in from your broker, then you might have to buy it out of the market. I'm not making a recommendation. I have no position in this company. They are not a client. I have zero conflict. Capital Markets scorecard for structure gets a C. We'll give it a C.